Select 50 Fund Focus. Joining me in the studio today is Julian Fosh, manager of the Liontrust UK Growth Fund. Julian, very good to see you. Now, the hallmark of this fund is quality. How do you define it?
Quality for us is two things. It's very high return on capital, or cash flow return on capital, strictly speaking. And secondly, allied to that, it's a very low level of debt or high level of solvency. And it's quite natural for the two to go hand in hand. Obviously, companies that are earning very high returns are able to self-fund and finance their levels of growth. And with the excess cash, often they choose to pay off excess levels of debt.
And how has that growth tilt been playing out in the markets this year?
Sure. Growth started to recover really early in 2015, last year, after 3 years of underperformance in the aftermath of the economic recovery. So it was a very good year for quality last year, and that's continued, albeit at a more muted rate, into the current year. So the first quarter was really notable for a strong rally in value styles, although growth outperformed marginally as well. But growth really come back into vogue very much post the Brexit vote, unsurprisingly, given the uncertainty that that's engendered.
Now, you're very well known in the city for your economic advantage thesis. Tell me a bit more about that.
Great. So we have a distinctive, in fact, we believe a unique philosophy, which is that the only companies worth bothering about are companies with a very strong competitive advantage stemming from their intangible assets, and in particular 3 specific intangible assets. So either very strong intellectual property, a very strong distribution footwork, either physical or indeed electronic, or high levels of recurring revenue. Companies that we think have this should, in theory, have a barrier to competition and be able to earn excess returns. We then apply to these companies a cash flow return on capital test to see whether, in practice, they're delivering on that theoretical advantage by earning excess returns. And if they are, it suggests that we're on the right lines, that they do indeed have a strong barrier to competition.
Okay. But the UK equity space is quite a crowded one. What do you think sets your fund apart from its peers?
I think first and foremost it is this philosophy. I think to our mind we're the only people focusing on a very distinctive intangible asset philosophy. Other people have copied or do the similar bits of it, but I think we're the only ones who've identified these 3 intangible asset strengths. I think also very important is the fact that we place valuation thirdly and lastly in our process. We don't start with valuation. It is unusual, yeah. I mean, often it's very tempting to deal with information sources which are readily available in front of you, but we think that's not really the key to success. Valuation is very much an art form, not a science. It's important to use the right valuation metric. PEs are all very well, but they're a one-dimensional measure, and there are other longer-term measures, things like EV to sales, free cash flow yield, which we think are important in evaluating a business. And often these very high returning companies are systematically undervalued by the market, which is short-term and using only a one-year PE number.
Thinking ahead to the next 12 months, what sort of things should investors be bearing in mind?
Yeah, it's a very uncertain time, obviously, with conflicting messages from the top-down macro environment. So we'd say it's very important to focus on the bottom-up picture and look at your specific companies and see what they're telling you. It's obviously very tempting to go with the flow and read what is in the newspapers, but I mean, there's a high degree of uncertainty out there, so it's important to focus on what you know, what the companies know.
And of course, grabbing all the newspaper headlines is Brexit. Of course, we're seeing very mixed signals. What sort of things are you hearing from company management?
Well, again, it's very mixed. I mean, so if you depends on the sector and the type of business you are. If you're an employment agency like Michael Page, I mean, it's no surprise that things are tough, and that's being reflected in your results. On the other hand, if you're a big multinational, it's more of a slight distraction to you. So it varies very much case to case.
So it's all about selectivity.
Absolutely.
Julian, thank you very much indeed.
Okay, pleasure.